Welcome back. As part of our series on the generosity crisis in the nonprofit community, we really wanted to focus on some specific examples of what we see. So one of the things that we wanted to talk about today is really the financial statement audit process and the challenge associated with that. Yeah. And we see a lot of times, obviously the requirement for companies to have an audit is a very low threshold. California, as an example, it's $2 million revenue threshold. And so that, because it's more of a sophisticated process, I think a lot of nonprofit organizations struggle fulfilling that requirement because they may not have the team that's sophisticated enough that has been through that before. So maybe we could talk through an example of what you've seen, Laura, in that, in that field and how we kind of move them forward and make sure that moving forward now they have a great process.
Yeah, we had a client recently actually where, if you think about the audit function and the teams that are working on the audit, they used to come to the organization and they would have, their field work week, right? No longer is that happening. It's all done remotely. So when you engage with an auditor, they're actually expecting that your files are digital. And they'll create a share file location for you, and you're supposed to just upload everything you have. Well, what if you can't upload anything because all of your papers, your records are in paper? And when they ask for a specific invoice documentation, you're actually going to the filing cabinet, you're trying to look and find it, and then you've got to grab the thing, then you have to scan it and send it. And so we find in these cases, and we've just, recently in this one instance, the audit was much delayed from their fiscal year end. Typically, your audit should be finished around 3 or 4 months from when your fiscal year ends. Well, in this case, it was, a year or two later. They're still gathering these paper documents and trying to find out where things are physically in order to get them to the point where the auditor can look at it and see it.
Yeah, I think the main point that I've seen is, in a lot of cases, is that an organization is required to comply with the audit process. So they hire an auditor. The auditor then provides them with a request list of the information they need to provide. Yes. And what I see a lot of times is the accounting team is now trying to create all of this information. The reality is, if the processes are in place from the beginning and you're closing the books every month the proper way, 90% of these schedules and requests that the auditors are asking for should already be done. Yes. Every single month. So when you have the audit comes up, they give you a request list, you say, great, here is everything, right? And then 10%, the remaining 10% is those, what you mentioned earlier, which is those the specific invoices or detailed transaction selections that they may make. That obviously needs to be organized, but I think the critical component is many teams we see don't have the sophistication to be able to organize and create these schedules, which gives potentially a lack of confidence in the books and records as a whole if they're not able to truly finalize and create these schedules. That's right.
So. And I back to kind of like even thinking about best practice templates, I see a lot of times where we say the word reconciliation, we might use that word, which is a common word in the industry, but the client might be saying they're reconciling an account, but when you look at it, it's just a printout of what's in the system. Yeah. It's not like a proper schedule or reconciliation for the account.
Of what's actually in there.
So what's actually in there. Like, oh, look, the balance hasn't changed. Okay, but like what's in the balance?
Yeah.
And is this accurate?
Yeah.